Well, good morning, everyone. Thomas Montgomery. It's a beautiful Friday morning. Today is March 6th, 2026. We get together most weekday mornings at 8 o'clock Central to talk about the grant, talk about the SPE, and really talk about the problem that you and I can help others solve by providing a legal, ethical, effective, and proven way to access capital. On Fridays, we tend to have a more condensed version because we, like most of you, have had a really busy week and we want to finish everything before the weekend. So, as usual, in the background, we have our website, spefunding.com. As you've heard us mention many times before, it is an essential resource for individuals who are wanting to understand how this model works. So I'm certainly willing, able, and will over the next few minutes give you a high level overview, but that is not a replacement for coming to spefunding.com and going through the three steps. We never, ever, ever want, again, a client to come back and say, well, I didn't know that, or no one told me that. So we can't really hold ourselves through these brief conversations to ensure that we've covered everything. So the way that we do cover everything is by having the curriculum here. And so through steps one and two, it provides a really deep understanding with great transparency. And then at that point, it's all about solving problems, right? And we can put the screen back up. And so we are here to solve problems. The first problem that we're here to solve is to provide access to capital. So, entrepreneurs, business owners that need money, that want money to start or grow a business, we provide a solution for that. Is it the only solution? No. Is it the best solution for them? I don't know. They'll have to come to that conclusion once they've gone through these two steps. But we can guarantee anyone through this unique model at least 250,000 in 30 days. And that's pretty good. Now, if they need more than 250,000, we can replicate it, we can duplicate it, but it's a structured model. It's a different approach. So as described here at the top, a special purpose entity, SPE for short, some people call it an SPV, is a legal entity created for a specific purpose, often used to isolate financial risk and be able to access large amounts of funding. So, at the most basic element, the way that we solve the problem of providing access to capital for small businesses is we provide them an SPE, a separate business entity that is optimized for funding. So it comes with all that's needed. It comes with the business plan and the financial projections, the feasibility data that lenders look for, but and it comes with a corporation, but it also includes the three C's: credit, collateral, and capacity. So from a credit perspective, and the three C's are what lenders look for to approve business loans normally. So, from a credit perspective, what we're going to do is address both the business and personal credit. On the business side, we're going to provide trade lines so the SPE, the business, looks strong. We've had discussions about that, trainings. It can be company cars, company credit cards, lines of credit, and so forth. And there's even some specific training and examples of success stories of getting company cars, for example. On the other side, we have personal credit. So, personal credit, of course, is the credit worthiness of the business owner. If we have an applicant, a participant that's not strong, instead of trying to manipulate their credit, we just simply provide a cosigner, and that's free and included. So, that's the first C. And I guess we can go ahead and break that down. So, we're providing the three C's: credit, both business and personal as described. Secondly, lenders look for collateral. So we provide the collateral, it's included with the SPE model. And the third is capacity. Lenders typically want to see that the borrower can afford to pay back the loan. Part of that can be indicated through the financial projections going forward, But there's nothing better than being able to present to the lender financials and even as specific as a bank statement of here's the cash flow we have coming in. Yes, we can afford that loan. Well, historically, people didn't get access to capital because either their credit was an issue and or they didn't have collateral and or they didn't have enough capacity, enough demonstrated cash flow. So we literally provide all three of those. Not too good to be true. If you don't go through the training, you probably won't understand it, but that's where these trainings come into play. So that's the first problem that we solve. We make it very simple and it's designed to be no out-of-pocket cost to the client. It's not a free program, but it's paid for out of financing. So once someone has gone through steps 1 and 2, of course, we're on to step 3. We click here, it pops up a screen on their computer, has an overview flyer that reiterates a lot of what we just talked about, explains the deliverables. And then on the second page, it's a simple one-page application. The top half is business information. All of it is optional. So if a participant, a grant participant, a client doesn't have a business or doesn't have all of this, it's fine. All of it is optional. Can leave it completely blank if need be. And then the bottom half is the business owner information, which is needed. Now, we do ask, for instance, about credit, but credit will never keep a participant from being able to participate. If we go back up to the top here, we very transparently describe that there is a cost. Now, as we kind of hit on yesterday, some people will say, oh, I have to pay money to get a loan. That sounds like a scam. Well, no, you should never have to pay money to get a loan. If you qualify for a loan, just go apply at your bank and get approved. What we're doing is providing a specific set of deliverables, legal and ethical deliverables, packaged as an SPE, a special purpose entity, that allows the client to qualify. So essentially, they're buying a business. They're buying a management consulting business that they don't have to operate if they don't want to. They could, probably should, but they don't have to. And we're able to use that SPE to get funding. Just like if you saw a gas station for sale in your community, could you go buy that gas station? Sure. Do you think that that gas station would more easily qualify for business loans than just some idea that you might have? Of course, because it's there, it's real, it's open, it has cash flow. That's what we're providing these folks. So they're literally buying an SPE. It's broken, it's 25,000, no money out of pocket. It's broken into two pieces as shown here. 5,000 deposit, and then we put together the feasibility data, the LOI, and then the license fee is 20,000. So it's not free. I think anyone expecting free is expecting something that's too good to be true. But people don't have to pay it out of pocket. We pay it out of financing in both cases. So, the bottom line proposition, if we want to go back over to our sheet here, is we offer a legal, ethical, and guaranteed solution providing at least 250,000 within 30 days. So that money comes in to the SPE. The SPE is your entity, the client, the participant's entity. They're the only owner of it. There's no nonsense. No one else owns any of it. And then those monies are unrestricted funds. So what a lot of the participants will do is borrow the money through the SPE. Using this model, the money comes to the SPE, but then the SPE can move that money into whatever purposes, whatever uses that the client wants. So if they're going to buy real estate, buy a business, or whatever, then that's usually a transaction by a second entity. Therefore, the SPE holds all the risk, holds the debt. The other entity now has the purchased items or businesses or real estate without liability. So that's the first problem that we solve. Does anyone have any questions about that problem? You can type it into the Q&A and we're more than happy to address it. And then the second and we've got a few questions I need to answer there, and I will in a second. And then the second problem that we solve is providing an adult income for individuals who desire to get paid to help others access capital. So every business has customers and every business has a business development side. Just commonly, businesses aren't very transparent, right? So when you go to the car dealership to buy your car, they don't spend a lot of time telling you and explaining to you how everyone else gets paid, the other side of the transaction. That's where we're different. We're transparent. We let everyone know, sure, there's two sides to the business. So anyone that's interested in being a distribution partner, that information is here at the bottom of step 3. There's two potential roles, one of which is to be an affiliate, one of which is to run a branch office. And this is where you'd find information. But going back to the two problems that we solve, the first of which is providing access to capital for businesses looking for funding, the second of which is an income stream for people that want to get paid to help others. So that's what we do. Now, the specifics, that's where we really encourage you to go through these trainings. Our purpose here is to answer any remaining questions that you have after you've gone through that training. If you need individualized assistance, definitely call our office. You see that number at the bottom of the website. All right, so we've got some questions. All right, so Charles is asking about adding trade lines and kind of when does that happen? So that's a good question. So let's go back to the flyer here. And when I broke it down, this is accurate. First comes the deposit, then comes the license. And so the deliverables with each are summarized here. But with the deposit, what we're doing is we're building out the essential paperwork that we need to be able to get the funding. And it starts with a feasibility study. Now, I understand that may not sound important to you. It may not even be familiar to you, but we're not really trying to please you. We're trying to get you funded, and we need to give the lender what they want to see. And they want to see objective third-party feasibility data. We have trainings on that. You can learn more about it right here. So it makes more sense. But that's the first thing that we do. And so we normally need about 7 days to get this part done. And then afterwards, then we can move into the funding phase. So Charles is asking during this phase, that first week, this part takes 30 days, by the way. So we need about a week here. The 30 days you keep hearing us refer to is true. That's once we're in the second step. So he's asking, can he go shopping for real estate and company vehicles during the deposit phase? Sure, you could. We won't have the financing ready to buy it yet. The financing occurs here in the second step, but yes, sir, you could start looking as soon as you wish. But when we're adding trade lines, that's part of the second step. So just to be clear, we're addressing the 3 C's here in the second step. We're kind of doing the prep work in the first step. Hopefully that helps you understand. All right, then the question is, so with the model that we have, it's so important to assimilate. So the SPE is a special purpose entity. This doesn't mean that this has to be the focus of your business pursuits going forward, but it is the entity that's going to go borrow the money. And so it's set up as a management consulting firm. You can operate it or not operate it. We've talked about those options, and you'll see that in the trainings. So there's no responsibility to operate it if you don't want to. The way that we put the paperwork together for the feasibility study is that we're going to show the lender, which goes back to under the deposit here, we're going to show the lender that the management consulting firm is going to be located somewhere. Of course, every business has to be located somewhere. And so that's going to be in some county, in some state that you decide. So then when our team's putting together the feasibility data, to substantiate it, it's relevant to a given area. So, yes, once the deposit is paid, which doesn't have to be paid out of pocket, it's paid out of financing, but regardless, once the deposit's paid or just simply financed, that's when we go ahead and get from you, the participant, the county and state, because we need the county and state to build the feasibility data. Hopefully that makes sense. All right, and then the next question is what happens when we have participants that need more than 250,000? Well, there's two options. I think the preferred one is they can just do this multiple times. So what do we know when we can put our notes screen back up? So we're able to guarantee back to problem number one that we solve in writing. So this isn't just a verbal promise. We guarantee a minimum of 250,000 per SPE. So what that means is if the participant needs more than 250,000, either this isn't the right fit or we could do it multiple times, and that's very common. So it's no different than any other business. You could open multiple offices, or at least say you're going to open multiple offices. So, of course, the more offices that you would need to open, plan to open, the more borrowing capacity you would have because each office could only support so much debt. The structure has to make sense. So, to get back to Mr. David's question, it's fine for clients that need more than 250,000. We just need to repeat the process. We can either repeat the process concurrently, in other words, they could enroll multiple times right now, or they could do it sequentially, do one after another. That's up to them. All right, so what other questions do you all have? On Fridays, we try to keep it a bit tighter just because I know you're busy and I know we're busy. But the bottom line is if you spend the time and energy to familiarize yourself in depth and in detail of how the model works, you'll understand that it's legitimate, it's real. There's no risk to you. We're bearing all the risk, and it's designed to be with no out-of-pocket cost. That does not mean that it's a free program. It's not a free program, but it's paid for out of financing. It doesn't have to be paid out of pocket. And then, of course, participation. If you're looking to raise capital yourself, that's at the top of step three. If you're looking to get paid to help others, there are two options, the affiliate role and the branch role, and you can see information there. Anything else I can help any of you with today? If not, you have a great day, a great weekend, and then we'll see you back Monday morning. Thanks, everyone. Bye-bye.